Today, we're going to take a close look at how to set up customer financing. Customer financing has been around for quite some time, but it has been gaining some prominence as of late. And it's a question I've gotten on an increasing basis as I do a number of my trainings. So I thought, well, let's go ahead and do a webinar on this just so that we can make sure that if you are making use of our software, and if you're attending this webinar, I certainly hope you are. And if you are either currently offering or looking into offering your customers the option of financing their purchase through a third party, um, then let's see how we can best handle that with the program so that way we can maximize your visibility of who's making use of financing, what the finance company owes you, the fees associated, and so forth. Um, let's go ahead and switch into my system. Actually, you are already seeing my system. As always, if there are any questions along the way, there is a questions box along the side. Feel free to go ahead and type in any questions that you have relating to today's content into that box. I will be monitoring the questions and doing my best to answer them as we go along. So we're still in my music system that we've been using all along here. I haven't done anything special with it in preparation for this, but what I wanted to talk about were two ways of handling customer financing, what I would call the quick way and then what I would call the correct way. Not that there's really one way or another, but I feel like if you're going to go ahead and offer this, why not go the full Monty and keep track of exactly all the details. And it doesn't take a whole lot more effort. What I've seen people do, and this is what I call the quick way, is they'll go into maintenance, they'll go into ledger, and they'll go into the payment category options. This is all the different ways in which you can take payments. And they'll go in and they will create a customer financing option. So they might come in here and the description might say third party finance. And they might set that up as a regular payment, and they might set that to a specific ledger account. And then they might turn around and have that set up to deposit that amount into the bank account at the end of the night, along with the daily deposit and so forth. And then at the end of the month, they might just go back in and they might back out the fees associated with that. That's the quick way, but I do not recommend this. For one, it's not really an all that accurate way of keeping track of the financing amounts. Now, you can certainly run reports on who is making use of this third-party finance payment method. There's reports for that. But I want to go one further because typically in a financing situation, the customer applies and gets approved, and then you as the store kind of have this gray area where the customer has walked out the door with their product and you're still waiting for payment on that from the financing company. So what we want to do is we want to address that. So instead of doing this, I'm not really going to go into all that much more detail here because I really don't like this method. What instead we're going to take a look at is instead of setting up simply a third-party finance payment method, what we're going to do is we're going to set up a third-party finance fee. And we're going to make use of this when the payment comes in. And usually when that payment comes in, it's paid in full less any fees that are getting taken out. So in the case of the ledger number here, we're just going to go ahead and point that to a typically some kind of fees or expenses area here. I'm going to go ahead and point this to the professional services ledger account. As always, my typical ledger disclaimer that I'm by no means a CPA or an accountant of any sort. You're going to want to discuss appropriate ledger numbers with your bookkeeper when it's all said and done. And it's just letting me know that, of course, if I am setting up a new payment category, we'll want to make sure that we go ahead and set up a button for that at point of sale. So let's go ahead and do that now. So we're going to exit out of here. We're going to go staying in maintenance, but into general and point of sale. And here in the point of sale editor, let's go up to the payment method or the payment menus. And I'm just going to go ahead and grab one of these. I'm going to copy and paste it here and align it up. And what I'm going to do is I'm going to change this function to stay as a payment category, but we're going to go ahead and point that to the third-party finance fee. And we're just going to basically go ahead, and what I am going to do is I am going to prompt for a total on that. So we're going to go ahead and put that in. I'm not going to have a default to the total, and we'll go ahead and click OK on that. So let's also go ahead and set the caption for that. Let's go back into the function button and do that there. There we go. Third-party finance, and if I can click right, fee. There we go. So third-party finance fee, and ignore my horrible data alignment or text alignment functions. So we're just going to go ahead and save that as is. And so now the most important factor, apart from just setting up that fee category for payments, is we're going to make sure that we have a customer account for the financing company. So let's go back to the main menu. We'll go into modules. We'll go into customers, and we're going to go to add customers. Now, you may want to set up some kind of other type of customer type in this case. I'm going to go ahead and use the charge customer option here. And in the case of name, I'm just going to go ahead and put in third-party financing company, and any other details that you want to have in here. The idea is this customer account is going to be the account that receives the billing. When it comes to point of sale, you may have noticed, both in older systems as well as version 12, that when you are in point of sale, there are two fields for every sales invoice. There's what's called a sold to and a bill to. The sold to is the customer that is purchasing the goods, right? The bill to is who is paying for them. Now, outside of this whole third-party financing situation, you may be in an industry such as the music industry where you cater to schools, and the school might be the purchasing customer, the sold to, and the district might be the bill to. So the district is ultimately footing the bill for the school. Or the teacher is making the purchase, but it's billed to the school. Or if you're not in the music industry, let's say you're in the cleaning business, the vacuuming business, and so forth. An individual comes in and makes a purchase on behalf of the cleaning company. There's all these different situations where the sold to might be different from the bill to, but that is the relationship. Sold to is the purchaser, bill to is the payor, or in this case, the financier. So what we're going to do is we're going to go ahead and make a sale here. So let me just go ahead and find something to purchase here. Let's just do a search for a guitar. I'm going to type in guitar, hit F6, see what I come up with here as far as any guitars, because offhand I don't remember what all I have in here. Hey, here's a perfect one, a nice, appropriately expensive good. Here, let's go ahead and grab one of these serials. And we'll just override that whole available for short-term rental. So there we go. $1,600 plus some tax comes out to $1,711.99. And what we're going to do here is we're going to pretend that Mr. Anderson has been approved for some financing. So he does not owe the store any money. Instead, what's going to happen is he's going to owe some regular payments to the third-party financing company. What we're going to do is we're going to come up to the Bill To field here. We're going to click on that, and we're going to go ahead and find our third-party financing company. So there we go. We can now see that the sold to has remained the same. That's being sold to Mike Anderson. The Bill To is the third-party financing company. When we tender this, what we're going to do is we're going to charge this to the account. And when we charge this to the account, it's being charged not to Mike, but to the financing company. So we'll go ahead and click Charge to Account. There we go. The full balance has been charged to the third-party financer. Let's go ahead and finalize. And then, of course, we can print a receipt if we'd like, or whatever we want to do with that. Let's just go ahead and throw this up to the screen just so you can kind of see what this looks like here. So there we go. We can see that up here, it's referencing that it was sold Mike Anderson. It's being billed to a third-party financing company. The full amount has been charged to the balance. And there is also a handy-dandy signature line down here just so that you can collect the customer's signature. I believe that also does print on 3-inch receipts as well. You don't have to set up anything fancy for that to appear. So we have now made the sale. If we go ahead and look at customer history, let's pull up Mr. Anderson, and we're going to see that there is a charge sale on his account for $1,700 and some change, but notably, the balance is zero. Mike doesn't owe this money. Rather, let's go back into customer history, look up the third-party financing company, and we're going to see that that same charge sale is now showing up on their account, and that's where the balance resides. Now, this does two things. This gives you, well, there's more than two things, but right off the bat, this gives us two advantages over simply having a third-party financing payment method. One, it shows that we didn't get any kind of payment yet. So this is an outstanding accounts receivable invoice. If we go ahead and look at the invoice history underneath this third-party financing account, this very easily lets us see who is taking advantage of this financing. So down here, we can see that this original purchase was made by Mike Anderson. We could also always do a reprint if we wanted to. And the important thing here is the balances. So we can see that this is still an open balance now. We have not yet received any kind of compensation from the third-party financer. Let's give a hypothetical now and say that the next day, the company wires us some money less the fees. So what we're going to do is we're now going to go ahead and go into an open account payment for that. Now, there's two ways to get into open account payment. For our purposes today, I'm going to go straight into modules and daily posting and OA payment. And when we come into OA payment, we'll look up the third-party financer. And what we're going to see here is that charge sale for Mike Anderson. What we're going to do is we're going to go ahead and say that this was paid in full. Now, of course, again, typically they're not giving you full compensation of $1,711.99. They're going to write you a check, or they're going to wire you money for less than that, and it's assumed that that's basically now paid for, that the financing company has taken out some kind of fees related to that. That may not be the same thing for every financing company. This is just in a situation where they do. Let's go ahead and check mark that, because we are going to show that we took that payment in full. And when we save this, it's going to ask, hey, how is paid? What we're going to assume that some kind of fee was out of that. So we're going to click that third-party financing fee payment method that we just set up. Recall that I prompted it to ask for a value, because we don't want this just assuming that this is the amount that's being paid in full, this $1,711.99. Yes, it is, but it's not 100% fees. Let's assume that a $150 fee was taken out of that. Let's go ahead and click OK, and it will now show that the remaining amount should come out to $1,561.99, and we're going to assume that that was wired into our account. So Basically, it was coming in the form of a check. So we're just going to say it's a check. Maybe there was a reference number of that. We're going to go ahead and say, okay, now this is paid in full. And when we finalize, that will now show as having been paid off less the fees. So just to, again, point this up to the screen so we could take a look at it. And now we see, yep, that was paid in full. There is no more balance on it. $1711.99 was the total amount. We took in $1561.99 in the form of a check or some kind of wiring into our account. The third-party financing fee of $150 was taken out. Recall that I pointed that finance fee to an expense account in the ledger, so it's going to already show as an expense on the P&L, essentially reducing the total amount of profit that this sale made for me. So whatever that $1711 was, if I remember correctly, $1,600 and some change, and assuming that the cost value on that was $400 or $500, somewhere in there maybe, then whatever the difference was as far as the margin, that's going to be what we had originally showed as P&L, now less the $150 fee. So that's what I would really recommend. You can see it didn't take a whole lot of effort to set that up. What this also gives you a huge advantage to is, should the financing company ever, let's just say, fail to send a payment or require some kind of statement coming from you, they are now essentially set up as a customer so that if need be, you can send them a billing statement. You can see exactly what these outstanding balances are. If you're doing a lot of business with them and they're sending multiple invoices paid in the form of one check, you can make multiple selections to pay off whichever balance is owing against. And so without a whole lot of extra effort, all that is really needed is to remember at point of sale, just make sure that you choose that bill to and switch it to be the third-party financing or whatever you've named them, whether that's Synchrony or GMAC or whomever it might be, Wells Fargo. I don't want to name too many names because I don't want to sound like I'm sponsored on anything. I'm certainly not. But whoever they might be, especially if you do deal in multiple financing companies, you can have them all set up as this type of customer where you can then switch the bill to be that customer and then keep track of all those fees accordingly. So hopefully that made sense. This is kind of a quick one today, just kind of rolling back into the week from the long weekend, hopefully for most of you. Hopefully you all had a relatively rejuvenating weekend. That's my hope that you had. I myself am a worn out actually, but we won't get into that too much. Looking ahead to the rest of the week, we have a webinar coming up on Friday. I have to keep reminding myself that today is Tuesday. We have a webinar coming up on Friday regarding lessons, best practices with the scheduler module, how the different ways are to handle invoicing, and so forth. And if you didn't get the notification, I know we sent this out pretty late on Friday, but we have a webinar coming up this Thursday. It's a special webinar between myself at TriTech and the good folks over at Vortex Web Hosting and TeacherZone. And the idea with this webinar, it's going to be about a half an hour long webinar on this Thursday at 1 p.m. Central. And we're just going to make sure that you all are aware of what we're doing as far as this triangular relationship that we have between TriTech, Vortex, and TeacherZone. Joe from Vortex and Chris and Tyler from TeacherZone will be here. We'll be doing a round robin of talking about the advantages of working with Vortex. If you've never heard of them before, they are basically our partner with web hosting and e-commerce. So they'll talk about some of the advantages of this relationship that we have. TeacherZone is a super player in the music industry when it comes to expanding your lessons program and going above and beyond with online and in-house teachers or learning functions that just keep those students learning beyond all get out. So we'll be talking about that. And we are planning on doing a 2 half-hour webinars. So we're starting this first one this Thursday. So I just wanted to let you know, all aware of that in case you didn't get the memo on it, didn't see it, it got lost in a sea of email over the weekend or anything like that. And just today, no announcement has gone out on it yet, but next Tuesday, if I remember correctly, yes, next Tuesday, I am the webinar on sales exceptions. So back to the grind of our normal core seminars that we're doing here. I'll be doing one on sales exceptions next Tuesday. Certainly more to be announced as we go. I don't see any questions coming in. So I believe at this point, I'm going to go ahead and wrap this one up. So thank you so much for your continued attendance during these sessions. And if there are any questions that you'd like me to go over, topics, contents, anything like that on a webinar, shoot me an email to training@tritechretail.com. I'll be more than happy to help out with that. And we will see you at one. Thanks so much. And I hope you can make it a great day.